In this video, traders, we're going to look at different ways to think about placing your stop loss, different positions depending on what you're trying to achieve, and we're going to use the MT4 platform for that. Stay tuned. Hey guys, a very warm welcome to you. All right, if you haven't checked out our channel sponsor yet, why not? There's links in the description below. Multi-regulated, loads of markets offered, different account types for what you're trying to achieve, and of course you can get access to MT4 through them, which we're going to use in a moment when we hit the screen. So when you're placing a trade, sometimes you're not sure where to put your stop loss. Like if you have it too wide, your risk reward ratio is screwed up and it's not very good because you end up getting stopped out and then you're not really making enough money to recover that loss on your winning trades. And if it's too tight, you get stopped out by noise. So what's the solution? Well, I've got a few ideas for you that I want to share with you now. When we hit the screens, we're going to open the MT4 platform account and we're going to see how we could basically think of different ways of placing our stop loss on a chart, regardless of what market we're trading. So let's hit the screens now. Hey traders, thank you for joining me. Okay, so I'm in MT4 now account. If you want to check them out, guys, there's a link to them in the description below. Those are our channel sponsor, a multi-regulated broker, heaps of markets offered, MT4 available, MT5 available. Well worth checking out if you're looking for a broker, if you're looking for a backup broker or looking to change brokers, maybe your broker hasn't quite been on the ball as you'd like, then link in the description below, go and have a look and check them out for yourselves. All right, so I'm in MT4 now, as I said. What I'm going to talk about, guys, is placing stop losses. So a few ideas on how to place stop losses a little bit more effectively, should we say. So you've got a couple of options when you're trading a stop. So the first one is really to use swing levels. So swing level would be something like a swing high, a swing low, i.e. a swing high is really the last recent high, the last recent low. So I've got here a US 100, which is effectively a NASDAQ equivalent, if you like, and a swing high is here and the swing low is here. Now this is a daily chart, D1 chart on MT4, and you know, if I was trading this from a long position, I'd probably want to have a stop under a swing low. Now this is going to be a swing traders type trade because we're on a daily chart, and of course that's going to be relatively wide, so I would obviously want to have a longer target, something a risk reward ratio effective. There's no point in just looking for you know, a kind of 5-minute drive and having a 4-day low stop. It doesn't make any sense because if I'm wrong, it's going to wipe out lots and lots of gains. So you've got to use in proportion to what you're doing. So swing low or swing high, perfect. Now if I was shorting this again, maybe my stop will be above a swing high. But one thing to point out, guys, digressing slightly, is that you don't always have to pull the trigger immediately. You know, if you're looking, let's say go back to that initial idea. If we're looking to go short on this, maybe you'd say, well, I'll wait until we test this and then look to go short. Because number one, if my stop is going to be around this level, so let's just draw a level on here. Let's just imagine, for example, that we had this scenario. Make sure I've got it selected and we'll just drag it. If let's say that would be our exit for our stop, then we really want to try and get as close to that as possible to get our short entry, right? Because that means that our risk reward ratio is going to be bigger. If we're going short and we're looking for rotation back to this 8,000, for example, then it makes more sense to try to get as close as possible. We're not going to go crazy and start, you know, wait until it's almost touching it because you're going to get stopped out from noise. But if we can get nearer, it starts to fail, starts to triple top at this high, and then you can work a slightly better trade rather than taking it now. Similarly, guys, you know, if you're looking to go long, this is not we're not recommending, it's not a recommendation at all. Just kind of literally just looking and thinking through how you would position regardless of what chart this is, regardless of what market this is. Ignore the market for now, but from a stop loss perspective, same kind of thing. If you thought this is a continuation type trade and we're looking to target highs or the 10,000 level, then you would probably want to try to work off a stop here if you're using a swing low. So of course you'd prefer to get it as low to this as possible to give your risk reward ratio the highest possible chance of success, or the trade give you the most bang for your buck, if you like, when you're correct. So that's something to bear in mind if you're using those swing highs or lows. So that's number one. Swing highs or lows, key thing. And you can also, of course, use that if you're using an hourly chart, if you're using a 15-minute chart, 5-minute chart, depending on, you know, what you're trading and how you're trading it, guys. You know, this is exactly the sort of thing you can do. Let me just scroll in and we can see a bit closer. So, you know, example, if we're buying it on this breakout here, we could have a stop loss under here. So plenty of things we can do, right? Going back to the daily. So I'll zoom in a little bit. We can use plus, by the way, just to zoom in. So another thing we can do is do an X day high or low. So that was the swing high or low, was this one, when we're looking for, you know, a key level that everyone's looking recently. And we didn't have a kind of definitive number on the number of days that was or candles, but we can use, let's say, a 2-day high or a 2-day low. So we can say, right, what happened in the prior 2 days? If we're taking the trade in the middle of the day here, okay, there's our stop below that low here if we're going long, there's our stop below that high there if we're going short. So we're using a little bit of a wider day. We can, of course, do the prior day's high, the prior day's low, or we can stretch out even further and go 3-day, 4-day, 2-day, whatever we want. So using an X number of days. Now, that works well when you're in a kind of an uptrend scenario and you're breaking out of an uptrend. So if you took this trade here and you said, right, we've kind of consolidated here, here's my low, and buying the next day, my stop will be below a 2-day low. So, okay, we're either going to go, if we're buying it here, it'll be here. If you're buying it here, it's probably going to be here. Of course, you have to have the risk reward ratio to go with that. And then you're just trailing up as you go. So as it goes, you're a 2-day low, 2-day low, 2-day low. Goes to the prior low, but there's your stop there. Then your stop then goes to here. So that might have pinged you out on this one, and you're taking your profits after this move up. So you're basically looking to find a way of judging where the trade thesis is incorrect, but not being pinged out with noise. What you don't want is the death by 1,000 cuts syndrome, where you have your stop so tight that you're getting stopped out. You think you're low risk. But in actual fact, you're taking, you know, 10, 20, 30 stops because the stop is so tight and it's just getting pinged out by noise, and it's just decimating your account. You're far better off using a wider stop, looking for a bigger move, and letting the market have a little bit of noise in between before it finally, you know, kind of runs on. Okay, so another thing we can do, guys, is we can, you know, insert an indicator, and we can use a trend. I'll go to the trend here and stick on a moving average. So moving average, if we use a 20 period, for example, I'm going to change that to this kind of color, we could trail our stop above a 20 period. So again, whatever time frame we're on, we want a 1 minute, we can use this. We want a daily in this example, we can use that. So that would require adjustment each day. We'd have to go in and we'd have to adjust the stop each day, but something we can do if we're in a trade, or even if we take the trade. You know, let's say we're breaking above this high here. So for, you know, that example we talked about here, if I can click this line, I'll drag it down. We talked about this example here. We break above this high. If you're taking it along here, you might say, okay, well, I'll use the moving average as an initial stop loss, so that distance from there to there, and then I'll just move it up each day as we go. And then finally you kind of start to get a little bit better, a little bit more movement. Another thing you can do, guys, when you're really chugging along with the move, you can use a moving average and use a slightly tighter moving average, like a 5 period. This is very tight, but what it does is it hugs price. And if you get a close below it, let's see you're swing trading again, you're taking that break out there, your first close below it is when you look to exit the trade. So you've got no close, finally you get a close below it here, you know, you've made that trade up through to there. So there's plenty of different ways of doing it. You've got swing highs, you've got your multi-day high or low, you've got your trailing on a moving average. Another one you can do is just a fixed percentage. So you can go, okay, what is the kind of biggest move, if you like, we've had to the upside? Let's say you're going short this time. What's the biggest move we've had to the upside? So you can start to frame it. And one thing you can do, guys, I've done a video on this, so go and check it out if you feel like it, is you can use this little adjustment for Fibonacci, which I've done, which allows you to get your risk reward ratio just spot on. But what you can do with this is you can extend it, and you can use the Fib tool for this as well, by the way. You can extend it and go, right, that was the biggest range we've had in this candle in the past run. I'm going to use that as a stop. So let's say you were going short on the close of this, you just drag your tool there and go, right, well, there's my stop loss. That's going to be my stop from there to there. And actually, theoretically, if you're using this tool, you'd do that because that's your entry. But you get the idea. You can start to then extrapolate things based on the range. So you take the range of the biggest candle move you've had, which is probably that one, maybe it's this one, close enough. And you say, right, that's the worst case scenario, theoretically, not always the case, but that's possibly the worst case scenario. I'll use that as a stop, in which case I'll go short here, if we're thinking of a short, and my stop will be here, and then I can frame where I want my targets, my risk reward ratios, and all the other good stuff. So that's one way of doing it, guys, is to look for the biggest candle. I know recently when I'm filming this, it's very volatile, so it might not be the kind of thing you want to do. Maybe you want to ignore the biggest one because that was news driven, and use the slightly smaller one, but you've got some ideas to play around with then. I find that's quite useful, especially if you're trading intraday. Let's say you're trading on a 5-minute chart, 15-minute chart, to see what's happened, the most aggressive 15-minute period, if you like, on the last few days. Use that as the width of the stop and extrapolate that out to where you want to take the trade now, and use that as a kind of reference point. Hopefully that keeps you from getting stopped out just from noise, and hopefully keeps you in, if it starts to go against you a little bit, but not too far, and doesn't let it go too far, that you're holding onto a trade unnecessarily that's actually an incorrect trade. So those are a few ideas, guys, on how to place your stops within the MT and MT account. If you want to check them out, the links in the description are below. Multi-regulated course, you get access to MT4. Quick account opening process. Go through it, speedy, done. Get your account open, get it funded. You can get MT4 and you can be trading very, very quickly. Take care, guys. Keep your risk managed. See you in the next one. Goodbye.